Hello, everyone. Welcome to Financially Lit Tuesday. Um, I am back at it again every Tuesday at 6:30 p.m., bringing you news, tips, and tricks on how to wealth up. So thank you everyone for joining me back today. So I will be going over life insurance, but for business owners. So for those of you tuned in, go ahead and hit the like, share button with your so that your friends and families can tune in as well. And then for those of you tuning in from the Sipping Wealth YouTube channel, be sure to hit the subscribe button and the notification bell so that you don't miss any Financially Lit Tuesdays. Um, and then go ahead and drop a comment in the comment section so I know who's tuned in with me. And then, of course, if you have any questions throughout the live, be sure to drop a comment. Let me know what your thoughts are, if you have any questions, concerns, all that good stuff. All right, so let's go ahead and get started. So, like I said, tonight's episode, we're going to be talking about life insurance for business owners. So, over the past couple of weeks, I've been getting a lot of questions about, life insurance, and then whether and people not knowing that, hey, as a business owner, it makes sense to get life insurance through the business as well. So I wanted to make sure that I come on live so that I can give you all more details and more information about this. So you're up to par on what the information is. So as some of you may know, I am a licensed life insurance agent. I do sell health and life policies. And that goes for a whole life, term, universal, and then that can be purchased, of course, through Grand Rev. We also work with a lot of different agencies as well to go ahead and get the right product for you. And of course, you can do a consultation to go ahead and do an illustration. An illustration helps with kind of seeing based on your information, your date of birth, any health issues, whether or not if you do have any, what a policy may look like for you as far as your budget, or if you don't have a budget and you just have a goal as far as how much you want your policy to be worth at, say, retirement age, whatever the case may be. So depending on what your goals are, what your budget is, I'll be able to put something together for you. So life insurance is pretty straightforward when it comes to the different products. If you have questions about the differences between whole, term, and universal, I do have a video on the Sipping Wealth YouTube channel going over the different policy types. So if you're like, I don't know the difference between whole and term and universal life, check out that video because I break it down so that it's easy for you to understand. So be sure to check that out. Let me make sure. So the whole thing about life insurance is in the event of your death or someone's death, a beneficiary gets paid out, whether it's a charity, your friend, your family member, your business partner, your business. So this is what happens with the life insurance policies, whatever you want to tie it into. So sometimes people have it where the trust may get paid out if in the event of someone's death. So you don't have to necessarily have it go to a loved one. It can go to a business partner, friend, I don't know, family member, person on the street that you met, and you're like, yeah, I don't know, a charity if you're choosing a business, whatever the case may be. But during this live in particular, I will be talking about different policies for businesses and how to go ahead and get that started. All right. So for you entrepreneurs, you understand firsthand that in the event of your absence, what's going, whether or not your business is suffering or not. So if you take an off day or you take an off week, whether or not your business will be able to sustain itself. So, but a lot of times what we don't think about is whether or not we want our business to continue after us. So we spend a lot of time working in our businesses. but not growing our business to a point to continue to outlive us, right? It's we think about building our legacy, building things that we can pass down to our children, whatever the case may be. So this is a huge component of it, as well as if you have business partners. This is something to consider as well. If you've built a structure where you're like, I have employees, I'm growing it's going great, then this is something to consider as well, because you're a key player in your business. So just to put that out there. So just like the sudden death of like a breadwinner of a family. So generally breadwinners are the men of the house. Right. So the man in the home, if something were to happen, he was the breadwinner. I'm giving you an example, right? He was the breadwinner for the family, and something happened. He passed away, or he becomes terminally ill, or he becomes disabled. So depending on a lot of the policies have this, but depending on what policy you have, you can have it where it covers permanently permanent disability, terminal illnesses, or in the event of death. So it doesn't necessarily have to be, oh, they died. It could be that they can't perform I believe 2 of the 5 or 6 key activities, which is eating, drinking, clothing yourself, taking yourself a bath, using the bathroom on your own, those things. So if they're not able to do 2 of the 5 or 6, I don't remember which one exactly it is, I have to count them out. But if they're not able to do that, then they're technically considered permanently disabled. So in the event of that, some policies do pay out due to those things. So just like in cases where the breadwinner is no longer able to provide for the family, in this case, if the business owner or a key player in the business is no longer able to be in the business due to their illness or due to their death, having a policy in place is crucial. Also, if you know that, hey, like life insurance on your own, of course, is definitely important, because you want to make sure that your family is okay. If in the event that something happens to you, or you want to be able to give something back to your family in the event of your death. So whatever your reasoning is, you have that policy on the personal end. But we're talking about a business today. So if you have first one I'm going to go over is if you have a business partner. So I know a lot of who out there has some business partners. I don't know. Go ahead and drop a comment. So let me know if you have any business partners, or if you have a business in general, right? So if you have a business partner, and you both are they're financially sound, you're creating the organization, you have an operating agreement, everything's going great, you built 6-figure business and beyond, it's popping, and then something happens to one of your partners, and you go through a period of having to restructure the organization, having to put in a new partner, bringing a new partner, or you're having to take on more responsibilities. Whatever the case may be, this policy helps in the event of something happening to one of the partners, because it can pay out what the other business, a surviving business partner. So it kind of works out like survivorship insurance. Well, whoever survives, the money goes to the survivor or surviving partner, right? So to make sure that, hey, the business still keeps operating, even though that key player, that business partner, is no longer there. So it does help. It does help with protecting the business from, financial difficulties or operational issues that may occur due to the death or permanently disability of the business partner. So there are life insurance policies for business partner policies where, you, like I said, you name the business partner as your beneficiary. The next one is your key person life insurance. So with your key person life insurance, it's literally in the name, right? So this is the key player of your organization like your CEO, or maybe your CMO, your marketing director, or your chief financial officer, or your secretary, whoever it is, key person insurance. This is the person that if they were to die, say you're a 75-year-old accountant who got who got grandfathered in to your business, and they're like, oh shoot, they kicked the bucket. And you're like, oh no, this guy's been here for 60 plus years. What are we gonna do now? But you had that key person life insurance on them, so it helps with, even though you have to there's some disruption in the business where you have to find somebody else to fill that person's place. You don't have it where it's a financial burden, so now you can easily plug somebody in. Maybe you have to pay them a little more money because the other accountant was grandfathered in, or the other key player, the other VP, whoever the person was there for a while. So maybe the new person is going to have to get paid more, whatever the case may be. But this policy helps to bridge that or help mitigate the risk and the losses during that time. So it helps in any like decreases in sales. Maybe your chief sales director, I don't know, whoever the person is, maybe he passes, but you had the policy on this key person. So definitely you can also look into that as well as the policy. And how this works is, if anything happens to this key person, the policy gets paid out to the business, so that they can continue to operate. And if, say, it was a partnership, and your key person people are each other, maybe it's like 50-50 joint partnership. And so one partner, so you have the business partner policy, right? And then you're like, hey, I want to make sure that we have the key persons policy that gets paid out to the business. So not only will you have a policy for your key partner that gets paid out to the other partner, but you have a policy that gets paid out to the business as well with your key person life insurance. And that helps with, that gives double protection, and that helps with, like I said, mitigating risk, any decreases in revenue that may be offset because of that person dying or becoming terminally ill. This helps with that. The next one I'm going to go over. Hopefully everybody's doing okay out there. Hopefully I'm not losing you. So hey Arthur, how's it going? Good evening. Just thinking about you and my receipts. Oh, no problem. Yes. So can't watch now, but I will watch later. Okay. Shoot. So yes. The next one I'm going to go over is the buy-sell agreement. So the buy-sell agreement generally happens when you have multiple partners in an organization, and you have multiple owners. Let's say they don't necessarily have to be partners; it could be owners, multiple owners in an organization, and you create this agreement. It can also be included inside of the operating agreement as well. So for my partners that have businesses together, I highly recommend an operating agreement. Before you start, making money and doing your thing, make sure you have an operating agreement on the table, notarized, all that good stuff, because things get a little funny when money gets involved, but when business starts moving and things like that. So you do want to make sure you have that agreement in place. All right, let me go back. So for this buy-sell agreement, what does it mean? Like, what is it, right? So the buy-sell is, hey, if one of the partners say, excuse me, my apologies, y'all. If one of the partners are like, hey, like, I want to leave the organization, I don't want to be here anymore, but I want you to pay me for my shares in the company, then you can go back to the buy-sell agreement, and then whatever it says, say, when we came together, we said if the other party wants to buy themselves out of the company, we have to give them $20,000. Right. So so the other person's like, all right, $20,000. So then they're like, hey, I want out. I don't want to do this anymore. Now the other partner could say, hey, I want to buy your shares for $20,000 so that you can leave the company. Or there are certain cases where they can sell their shares to someone else. So depending on how you align the buy sell agreement, you can either sell it to another person or you can sell it back to the company or an individual in the company, the other partner, the other owners. So in the case of now coming back to the life insurance policies, how this would work is essentially if something if the partner's like, if something happens to the partner, they die or something. If the partner dies, let's go ahead and put it out there. If the partner dies, then you're like, oh shoot, like what happens to their shares in the company? What this buy sell agreement what this policy can actually do is issue out the money necessary to buy the shares back from the deceased owner. So if the agreement was $100,000 and the policy was for $100,000 to buy back, if anything were to happen to that partner, then you say, hey, you exercise that policy to go ahead and pay out to buy the shares back from the deceased person. So that is another way of, incorporating the life insurance into your business as well. One thing to note, excuse me. One thing to note, the premiums paid for life insurance of a buy and sell agreement are not tax deductible. So, so it's like, oh yeah, dang. You're gonna have to pay it. But the death benefit is paid tax-free to the beneficiary. So that does help, even though, those, premiums paid aren't tax deductible, that, once you receive that benefit. So if it was $100,000 to buy back and for that buy sell agreement, then that money is tax free. Just not the premiums. All right, y'all. Don't be like, oh yeah, life insurance tax free, tax deductible. Just so that we make sure we're on the same page here. And of course, if y'all have any questions, let me know. Don't be shy. If it has to do with life insurance in general or finances in general, you can feel free to drop a comment and let me know what's on your mind. Those business partners who are also married, so they could also be a line of protection for them as well. So, and this is like huge generational wealth as well. Especially like if maybe the married spouse is in the business as well. So that could be a huge plus for the spouse. And then on top of the individual policies and on top of the buy sell agreement and any other like policies that you want to put in place. So when it comes to term or whole life insurance choices, it's a matter of, what your goals are, how you feel about them, and your financial capabilities. So with whole life insurance, it's a little more expensive, but it will pay out no matter when the person dies. Now, when it comes to term, it's less expensive. And a lot of people have term insurance because it's like, they're like, oh yeah, I have life insurance. It costs me $30 a month. Or I have life insurance and it only costs me $60. And I have $1 million policy, but that's generally term insurance because you get a high death benefit for a little bit of money. Or I won't say a little bit, it's relative, but not so much money versus, but at some point the insurance will expire. So I just been there. Yeah, yeah. So with term insurance, it will expire, and then so as some if the person doesn't die within that period, then that's it. Also, with term insurance, if the term period is up and now you want to reapply for a new term insurance, you have to reapply under the same guidelines, like under new guidelines. So if you became sick since the first time you applied for term, then that could affect that will affect how much you're paying out as far as a premium. So it will be higher as far as how much you have to pay for that same death benefit. Also, because you're older at that time, it will increase the amount that you're paying out as well. So, for example, and this is not like exact numbers, y'all. So let's relax. But for example, say I'm 20 years old and I get a term policy. And so I pay $15 a month for $500,000, which can be very pretty realistic. So $15 a month, I get $500,000. This is a 20-year term. 20 years later, now I'm 40 years old. Now I have to reapply at 40. Say I don't have anything wrong with me. I'm okay. I'm healthy. It's golden. That same policy at 500,000, because I'm 40 years old, is going to be a little more because the cost to insure me and the likely chances of me dying during that period is a little higher. So, but it will push me out, another 20 years. It's still cheaper at that time, like say at 40 years old versus doing like whole and term. But whole life generally carries over through the person's entire life. Now, there are whole life policies that do expire, so you do want to make sure the person that's writing the policy is talking you through the policy and what all it entails, and making sure that it's going to cover you throughout your whole life. Because even though it says whole life in the policy, it can expire or lapse, I should say. It can lapse. So definitely want to make sure that you have the right policy for whatever goals that you have. But hopefully you don't have any more questions, or if you have any questions on the whole and term policies. Now these can definitely come into play when you're writing these business policies as well. So whether or not like whichever policy you want wrapped into the different business policies that I went over previously. Okay, so the factors. Okay. The factors that should affect this decision would be, like I said, the age, their health, their weight, height. If also if you see a physician and they can go into the record. Sometimes they don't have to, depending on how much you're asking for. You don't always have to do a blood and urine sample for policies. It depends on, a lot of times, different with different companies. It depends on how much you are being insured for. So with whole life, whole life will give one another and their business partners peace of mind, because, like I said, it does cover like longer period of time. It is a little more expensive. Term it is still a good option for term insurance because you're getting a high death benefit for a little bit of money. So one thing that I do a lot when I'm writing policies for my clients is doing both a term policy and a whole policy, whether it's universal life or a whole life insurance. Because with that, you still have the component of having the term at a low cost with a high death benefit, but you also have that insurance that's gonna be there for the full term of your life. So that's growing in cash value. So the IULs are great for that. Index universal lives, they're great for that growing in cash value. They are a little more expensive, but I like the having the option of having both term and life. Younger people, generally go for term because they don't really have as much money. And then they wait until they start having kids and stuff and add on the bill. But it can help with having it early to allow the cash value and everything to build up. So like I said, for those of you wanting to know more about the different types of policies, like me going in depth as far as the differences between them, you can check out the video on the Sipping Wealth YouTube channel. And you can go onto that channel and look up the life insurance video, different types of life insurance, something along those lines. And I break it down there. In some cases where a business owner owns the life insurance policy rather than the business may be able to deduct the premiums as compensation to the owner. So, in plain English, if the business owner owns the policy and the instead of the business, then the business can in a way deduct the premiums and pay it out to the owner as like compensation to the owner. So as like wages on their W-2s and all that to the owner to show that, hey, there's a life insurance policy out on this key player, this partner, whatever the case may be. Yes, so that's a different way to kind of plug that into there. So hopefully you all were able to grasp that. I did talk about, basically like how to build wealth with having the life insurance put in place within your business. A lot of business owners, I should say, don't consider this aspect, as well as retirement planning with your business, having pension plans through your business, and all that good stuff. There's credits for it, there are deductions for it. So that is something that I'll go over in the future. But in this case with life insurance, there aren't credits for it. But on the back end, there is an influx of money that is to be received in case of anything happening to the players in the business, whether the owners, whether different partners in the business, whatever the case may be. So just to keep that in consideration. Any questions? I always have questions, especially as I get older and technology advances. Absolutely. If you do have any questions right now, you can jump it in. But yeah, and things do change. Like universal life is fairly new type of life insurance. So and because traditionally you have your term insurance and your whole life. Those are traditional insurances. And as we advance, different riders come along. So different ways of including different aspects, including your kids and term policies. So you can have a term policy and then include your kids within the same policy. There's so many different ride-alongs. You can have it where, like I said, you pay out different entities. So there is definitely lots. It really depends on what you're looking to do. So whenever I talk to my clients, I'm like, hey, what are your goals? What do you want? Right? What do you want? You just let me know what you want and I help you get there. Right? So, or we help you get there, I should say, because we're a team. Let's partner up for future growth. African American Economic Recovery Think Tank, LLC. Okay, absolutely. Yeah, and I go live every Tuesday at 6:30. Like I said, bringing you news, tips, and tricks on how to wealth up. So I will, and in other news, to close out this Financially Lit Tuesday, so we will be having the Wealthy Brunch next month. So for those of you that saw it on social media or whatever the case may be, I asked you all, what you would feel, how you would feel about doing a wealthy brunch. Which is, we're talking money while eating brunch and sipping on mimosas, right? So it's a great way to commune, but also wealth up. So be on the lookout for the flyer and promotional material for that. We'll also be dropping the link to buy your tickets. There's only I can only fit 50 people in the room, so it's like, hey, 50 people, we're done. But for those of you that are interested, like I said, be on the lookout, because like once I put the tickets out there and they're done. You gotta wait for the next one. But thank you all for tuning in to another episode of Financially Lit Tuesday. Come back to next Tuesday at 6:30 p.m. where I bring you news, tips, and tricks on how to wealth up. I will see y'all later, and have a beautiful, amazing, financially lit rest of your Tuesday. For those of you that have questions, concerns, things like that, if you want to follow up, you can text the number on the screen, or you can send a DM. You can you can literally reach us on every platform. You can even call that number. Probably not right now because no one's gonna pick it up. But yes, you can shoot it a text. I will see you all next Tuesday.